Welcome back to the channel. I'm Ryan. This is Simplify with Ryan. On this show, we talk about all things financial independence, but in particular, we focus on simplified ways to achieve your goals and simple ways to avoid destructive behavior or things that can really set you back. Now, in today's video, we're going to jump into the idea around buy now, pay later programs. You've probably seen these programs pop up all over the internet. In anything you want to buy, there's a little box down in the corner and it's giving you a buy now, pay later option. There are tons of companies offering this service, and it's really important to know some of the risks and things to look out for if you do want to utilize this kind of a financial service. And in general, if you're looking at the holistic outlook of your financial picture and you feel like you need to use one of these programs, there might be some other things that you should look at first just to make sure you're in the right position to be spending the money that you're spending. I'm first going to share with you some of the history behind buy now, pay later programs. I'll also add a couple of thoughts about some of the risks that exist, and I'll talk a bit about my own personal philosophy relative to these programs. Now, this may be surprising to some of you, but these modern day buy now, pay later programs have roots way back into the 1920s. It was at that time that a program called a layover program was established. Now, this was mostly held at large department stores, and you could basically put a product on layover, so you could take it home and pay installments to that store over a period of time to essentially own the product. Very similar concept. In fact, you're going to see a lot of similarities with this type of program and its evolution, and with credit cards and with similar offerings. Now, fast forward to the 1950s, this is when credit cards started to become a big deal. So consumer debt was offered through the form of a card during this period of time. Now, this took over for the layaway programs that were being offered at the time, and really we transitioned into this consumer debt society that we now see today. Now, this period really dominated for about 20 years as traditional consumer debt. Now, don't get me wrong, consumer debt is still a foundation behind our society and how the economy works, but different products started coming out after the 1970s. Now, one program, I think this started closer to 1980s, had to do with installment payments. Now, this was a plan that was offered typically at a larger retail store. So think large electronics, large furniture purchases, and the like. People would go to these stores, and directly from the store they would offer installment plans on the items that they were purchasing. This would allow the consumer to pick up furniture, let's say, for an entire new home at a rate that was affordable and broken out over installment plans each month. Now, I think some of these initial plans did not actually require interest payments. They were offered at a 0% interest and were attractive for people who were trying to buy things that they just simply couldn't afford. So combine this with earlier sentiment around credit card adoption, and you start to see some of the foundations of problematic spending and behavior when it comes to credit. You add this type of program in without interest, and it's very manageable. So if an individual has credit debt at this time and then adds an installment plan, it's pretty clear and transparent what your payments are and whether or not you can afford it. But this segues into the early 2000s when online transactions started to become very popular. Because accessibility to products was now moving from retail, in-store, to online, you started to see a lot of different options pop up that would allow for these types of buy now, pay later options. Now, this industry, like all new industries, lacked regulation in the early 2000s. We'll talk a little bit about how that's evolved over the course of time, but suffice to say that regulation is really not very advanced in this area. So from 2010 to 2020, a lot of new companies started popping up offering these services. Afterpay, Klarna, PayPal Credit, Sezzle. There are all sorts of services now that are attached to different retailers and have different agreements with those retailers to offer you a buy now, pay later option. Now, obviously, this became really popular throughout this period of time because online shopping was now becoming the norm and people wanted to have options when they were going to make large purchases. Now, this doesn't mean that the credit card industry per se was impacted in a big way. In fact, I think there's a lot of synergy here between big credit card companies and some of these buy now, pay later options, but the two worked in tandem, and this is where some of the challenge starts to arise. It's really hard to keep track of the debt picture of an individual. Now, of course, we have our credit score system, which is an attempt to demonstrate whether or not an individual is credit worthy and can take out these types of financial loans. But there are lots of holes here, and so this is one of the problems we'll get to later, where it leads a consumer to take out more loans than they reasonably can afford. One of the real accelerants of buy now, pay later programs happened during the COVID pandemic. This was a time where everyone was stuck at home and people were buying things online at an unprecedented rate. So these programs started popping up all over the place to allow people to buy and buy and buy more. Now, this also was an unusual time for the economy. Lots of weird things were happening. So it depends on at what point in time you're looking. If you're talking about early 2020, things were very different from early 2023. But this period really accelerated the growth of these buy now, pay later programs, which are sort of a normal institution now on any product site that you're looking to buy something. Now, to share some of my personal thoughts, it's easy in my position to say these tools are a scam, they're a fraud. But the truth is they're not a fraud. They actually are a legitimate financial instrument. But that doesn't mean that all people should utilize these services. Now, I can boil down my issues with buy now, pay later to a couple of key considerations. The first has to do with overextension of credit. We already talked a little bit about this, but basically all of these companies really just want to make a sale. And so they give you money and they give you the terms. All of this is done in a really transparent way. You know how much you owe, you know what your payments are going to be, and you know what your term is. And so with all of this information, it is ultimately the responsibility of the consumer to make sure they can afford this item. Unfortunately, what can happen is a consumer might not understand the bigger picture. And so everything starts to stack up. If you utilize this type of service frequently, you might buy a bed on one day, the next day you might buy some furniture for your home, and then further down the line, you're utilizing this service to buy a new TV for your new home. These things accumulate and add up, and in some cases, too much credit is extended to an individual who really can't afford all of these items at once. They may have a precarious job situation. There may be other reasons why an individual is approved for a certain purchase, but ultimately shouldn't be making that purchase because there are lots of other factors. If you've purchased a home, you'll know that today it's much harder to buy a home because the bank lending standards have gotten increasingly difficult given the high interest rates and the current real estate environment. Now, this happened largely in response to the great financial crisis and the housing collapse in 2008, whereby many individuals who were not very well qualified to purchase a certain home were given money. This was done over and over and over again. And finally, the end result was overvalued homes, which really were worth less than people owed on them. And then you throw on top of that any downturn in the economy. People are unable to afford the homes that they purchased, but yet we're told by banks that they qualified for the loan and they could afford it. There's a fine line here between personal responsibility and the ethical and moral responsibility of a company to be transparent about what an individual can actually afford. And although I am very pro personal choice, an individual should be able to make the decisions that they'd like to make, but at some point regulation needs to be offered to make sure that these companies are kept in check, whereby profits of a company are not prioritized over the well-being of the individual. Now, the other area to keep your eye on if you are interested in using a buy now, pay later option is to be super clear on the hidden fee structure. A lot of these companies offer transparent terms, and as long as you're able to make your payment every month at the agreement level, then there isn't any problem. In fact, a lot of these tools offer you a 0% interest rate for the first number of days. It might be for 1 year or 2 years. As long as you make those payments in full every month, you're good to go. If you're responsible with your payments and you don't take on more payments, maybe 6 months down the road, and put yourself in a precarious position, you should be covered. But if you do miss a payment, or if you start to become behind in a significant way, there are often very heavy penalties associated with missing those payments. This can really set you back. So that's why I feel like these programs in general are not the greatest tool for those who are struggling financially. If you find yourself in a position where you can easily afford a product, but there's a 2-year interest-free loan in a buy now, pay later program, and you'd rather take all of that money instead of dropping it into the item, let's say the item is $10,000 for furniture, and you'd rather take that $10,000 and invest it in something else, you know you have a steady income, you can make your payments, then there's really no harm necessarily in doing that. But you really need to understand your numbers. And that's where people get into trouble. They operate on what they're making in a current moment, but they don't look at the long-term picture. They don't look at the risk associated with their job. They don't look at unexpected life events that might come, such as a massive home repair, a car that breaks down. Maybe somebody gets pregnant and then needs to deal with bringing a child into this world, or a medical cost arises. There are all sorts of unanticipated costs, and most of these buy now, pay later companies, they just look at your current day picture. That picture may be really rosy, but it's not taking into account some of the risk that exists just by living life day to day. I don't believe in them, and my basic philosophy is that if I can't pay for an item in cash, in full, then I don't buy it or I don't need it. Now, there have been occasions where I've utilized a particular offer if it's interest-free for a period of time, and usually that has to do with the management of some other really capital intense thing that I'm doing. Let's say I had a roof that I needed to repair or an appliance go out, and I really just wanted to leverage my money a bit differently in the moment. But 9 out of 10 times I will not even look at those programs because I don't think they make a lot of sense in the long run. Now, your case may be very different. You may actually really like these programs. You may thrive on trying to maximize your gains by 1 or 2%. So you're really trying to optimize everything. And by using these programs and interest-free leverage, you really can do a little bit better, but I see the gain as very marginal, and I see it as clouding your overall financial picture if you're going to make decisions about new things going into the future. So I recommend for everyone to do a couple of things. First, know your numbers, understand where you are personally and financially. Always think about every purchase in a collective bunch of purchases. You need to understand the things that you currently owe on, and if you're adding something new to the mix, you need to include that into a much more detailed understanding of your financial picture. So you should have documented very clearly what your monthly expenses are to include all of the debt that you currently have. If you haven't done that already, I would never advise anyone touch one of these programs. Now, if you have all of that information, it's clear to you what you can afford, then definitely consider one of these programs, but not without some consideration of unexpected life events that might pop up. Now, if you've done that, you have an emergency fund and you're good to go, you feel pretty secure, By all means, utilize these programs if you like them. I certainly have my opinion. That may not be your opinion, and that's fine. I think clearly the population has spoken in favor of buy now, pay later programs, and so they'll continue likely to grow into the future. If you are going to use them, do the bare minimum and make sure you understand the terms and agreements that you're signing up for. Make sure you understand the hidden fee structure. And by having a clear financial picture of your monthly costs, ensure that you're able to make these payments on a regular basis with a pretty high degree of certainty. But if you aren't thinking about some of these things, I would encourage you to take a couple steps back, do some evaluation of your personal financial picture before jumping into that next big purchase because you think it's affordable based upon the monthly payment numbers that are offered through one of these programs. I hope you gained some value out of this discussion. Again, these are my personal opinions. I definitely respect yours if you have differing opinions. I think discussion is healthy, and here I'm just trying to share some of my tips and tricks, but I'd love to hear some of your thoughts below in the comments. If you're enjoying the content on this channel, please subscribe, like the video, and let me know if there are any other topics you'd like me to cover in future videos. Thanks again for your support today, and I'll look forward to seeing you next week. Take care.